Hey traders, what's going on? Got another episode of the Supply and Demand Trading Podcast. This one's going to be how to qualify a zone and what I look for. It's probably going to be a pretty short one this week. I've been pretty busy this week, but yeah, anyways, let's get right into it. So, when you're looking for supply and demand, I know traders that look for many different things that are supply and demand traders. Some guys look for, let's just say you're looking for demand. You want to qualify that demand zone. Well, I know some traders that look for a momentum line break in order to make that zone tradable. Other traders look for that demand zone to take out an opposing supply zone. And every trader's different, right? Like some traders might want two opposing supply zones taken out to qualify a demand zone. Some traders might want one opposing supply zone to be taken out in order to qualify. Everybody has their own rules, right? And that's why you want to be back testing. You want to go back and do some back testing using TradingView or whatever software you use in order to figure out what the best method is for you for qualifying a zone, right? Because every trader is different, right? Like it's obviously supply and demand. It's all just the same general concept, right? Like we might be looking at the same demand zone, but for you, it might not qualify. But for me, and according to my rules and what I've seen back testing, it might qualify. And it's important to know that sometimes, like for me personally, I like to see the demand zone I'm trying to buy at, removing an opposing supply zone, at least breaking the momentum line, right? Like I don't have completely strict rules as of now. I'm still kind of practicing and seeing what I like best, but at minimum for me, I like to see an opposing zone removed. So if I'm looking to buy at demand, I am looking for an opposing supply zone to be removed at minimum. If that demand zone breaks a momentum line, that's great. That's even more added value. Lately, I've been looking more for engulfing candle structures. So if the demand zone I'm looking at to buy is a engulfing engulfing candle, if it engulfs a previous candle in that base, and it takes out an opposing engulfing, it's super strong in my opinion. From what I've seen, how I've been back testing that lately, I can tell that that's pretty strong. So that's something that I've been looking for. I know a couple other traders that they look for a demand zone, and then they kind of look for some sort of support and resistance zone to be broken. It's not like a support and resistance zone, right? But like it's called like an event, right? Like where you might see there's a small zone that's been holding up price, and you can see it reacting off it a bunch of times. I know traders that wait for that to be broken, and then they find the basing that broke that, the zone that broke that kind of support and resistance that had some friction on it, right? So, like I said, every trader is different, and it's important to know that sometimes the worst zones work, and sometimes the best zones fail, right? Like sometimes it drives me nuts. Sometimes when I see the zones, I'm like, oh, this zone's perfect, and sometimes it fails, right? Like, and then I see a zone that literally it looks like a supply and demand zone. It had a nice base, it had a nice rally out of there, but it never broke a momentum line. It never took out an opposing supply zone. And I'm like, you know what? I can't trade that. It just doesn't fit my rules and my criteria for a tradable supply or demand zone. And then I watch it work out perfectly as if the zone was perfect and it did fit my criteria. And it's frustrating, right? But I think the important thing is just to have your rules so that you can take the emotion out of it, right? Like let's just say you have a rules, right? Let's just say you have done back testing. You say, in order for me to have a tradable supply and demand zone, I needed to remove two supply zones, right? Let's just say it removes one supply. So you needed to remove two supply zones in order for that demand zone to qualify. Let's just say it removes one demand zone only, and it's starting to come back to that demand. Or let's just say it removes one supply zone, and then it's starting to come back to your demand zone. You're like, well, according to my rules and what I've seen, I cannot be buying here because it does not fit my criteria. It did not remove two opposing supply zones. It only removed one. You have to be okay with that, and you have to be okay with watching that zone work out, even though you know from your own backtesting that maybe in the long run that won't work out in the long run, and you'll lose over time by only having one zone removed. I'm just making stuff up. Like I'm not saying that that's true. I'm just giving an example, right? And that's part of trading, right? You have to have your rules, and you have to be okay when something goes against your rules and you don't take the trade and it works out anyways. You have to be okay with that. And that's something that, I'm still learning. I'm sure a lot of traders are still learning that too because it's pretty difficult, right? It's like seeing the worst zones um, work. It's like, oh my God, seriously, should I be trading those terrible quality zones? And the truth is, I don't think you should be, right? Like, it may work out. I don't know if anybody plays poker, but I play poker as well. And it's like, sometimes the best hand to go in with is ace ace. The worst hand I think is 7-2 offsuit. And sometimes that 7-2 offsuit is gonna work. Sometimes that 7-2 offsuit is gonna beat the ace ace. You might have 7-2. Some other guy might have ace ace. You guys are going in. You see the flop. You might flop a full house with 7-2. You might flop two pair, and that two pair might hold up against ace ace, which is the better quality hand. And that ace ace, you will win over time with that ace ace. There's math to it, right? Like that ace ace over time pre-flop. Every time you have ace ace, you could go all in pre-flop, and in the long run, you will come out ahead because regardless of what happens after that, if you get a caller that goes all in with you, you will win over time because that math works out. Where 7-2 and crappy hands like that, like, yeah, you can win fucking five. Sorry, pardon my language, but you can win 5 in a row with 7-2, and it's luck, right? Like all in, like, I don't know the percentages exactly, but like ace ace is like 87-89% or something like that, and then like 7-2 is like 30 or something garbage like that, right? And that's the thing. You're gonna have supply and demand zones that are an ace ace and that fail. And you're gonna have supply and demand zones that are a 7-2 offsuit that work perfectly. And you just have to find which hands or which supply and demand zones you're gonna use, what qualifies that for you, and you have to stick to those rules and understand that sometimes the best zones are going to fail and sometimes the worst zones are going to work. But like I gave the example with the ace ace and 7-2, sometimes the 7-2 is going to destroy the ace ace, but in the end the ace ace will most likely give you better results in the long run regardless of short to medium term luck. And the only way you can get there and learning your criteria and knowing what you like best is if you backtest it and see it yourself. So that's pretty much all I have to say about finding tradable zones and how to qualify a supply or demand trading zone. If you have any questions or you want to know anything more specific, please let me know in the comments down below. And if you made it this far, give it a like. I'd really appreciate it. Take care, guys.